Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 17th of July 2022 and we're publishing our gold and silver weekly update for the week ending the 15th of July. We're running a day late and apologize for this, and so this video and the copy of it, which we will produce under a separate thumbnail and heading, will both be published today. The first just after midday GMT and the second around 5 or 6 p.m. GMT. We can see that gold and silver took another dip this past 7 days, so without further ado, let's take a look. First, looking at precious metals, gold fell $35 last week, falling from $1,743 to $1,708, having hit a high of $1,745 and a low of $1,698, breaching that $1,700 level, a fall of 2%, following the previous week's fall of 3.7%. In sterling terms, gold finished the week at £1,440, down £8, and in euros it closed at €1,693, that's down €18. Silver fell 59 cents, falling from $19.33 to $18.74, having hit a high of $19.42 and a low of $18.16, so at least the $18 level held. A fall of 3%, repeating the previous week's fall, also of 3%. In sterling terms, silver closed at £15.80, down 27 pence on the week, and in euros it closed at €18.57, that's down €0.43. The gold to silver ratio rose from 90.2 to 1 to 91.1 to 1. Looking at the prediction we made last week, quote, we expect to see gold trade between 1700 and 1800, with 1650 and 1825 as outliers. We forecast silver will trade between 1825 and 20, with 1750 to $21 as outliers. Well, gold traded within a range of $47, compared with $82 the previous week and $57 the week before that. Apart from a momentary dip by $2 into our outlier range, it remained range-bound within our normal trading range as predicted. Similarly, silver traded within our forecast, except for a momentary dip by 9 cents into our outlier range. Overall, silver traded within a band of $1.26, compared with $1.27 the previous week and $2.16 the week before that. Now we can see that gold took a significant dip on Thursday and closed only a little above its lows on Friday. Silver likewise took a significant dip on Thursday, but did manage to regain some ground, in fact 60 cents on Friday. Now before we analyze this further, let's look at some of the other financials. Bitcoin has risen this past week by $2,326 and currently stands at $21,359, giving hope to the cryptocurrency community. We're not totally convinced that the rally is set in stone. Equities fell by only a modest amount last week, thanks to a rebound on Friday. The Dow Jones closed on Friday at 31,288, up 658 points on the day, but down 50 points, that's 50 points on the week. The S&P 500 closed at 3,863, up 72 points on the day, but again down some 36 points on the week. And the Nasdaq Composite closed at 11,452, up 201 points on the day, but down 183 points on the week. Brent crude, looking at oils, closed at $101.16, thankfully down $5.86 for the week, followed by a previous week's fall of $4.61. So we've had over $10 fall these past 2 weeks. And WTI crude closed at $97.59, down $7.20 on the week, following a fall of $3.64 the previous week. Let's hope that will continue to occur, and we think if the dollar index continues to rise or maintains current levels, we should see that. The dollar index now stands at 108.06. That's up 1.16 points on the week and follows the previous week's rise of 1.49 and the rise before that of 0.96. So we've had over a 3-point rise on the dollar index these past 3 weeks. Now, we stated last week, and it's already come to fruition, quote, we expect the dollar to remain solid within the index, holding between 105 and 107, with potential of a 108 figure as we near July the 27th. Unquote. Eat your heart out, all those who've been predicting the collapse of the US dollar for the past decade or two. We said it would not happen in this time frame, and not only has it not happened, but it's even gaining strength against other currencies, and will do so for a while yet. Of course, we fully accept the fact that with inflation soaring, all currencies overall are down. But it's the comparative figure that we are particularly interested in, because this is what will affect gold and silver prices. In our report last week, we stated traders will be watching CPI on Wednesday and retail sales on Friday in particular. Well, on Tuesday, we saw the NFIB Small Business Index for June fall quite significantly, from 93.1 to 89.5. But then on Wednesday, monthly CPI for June came in at 1.3%, compared with 1% and against expectations of 1.1. Core CPI again higher than expectations of 0.5%, as they came in at 0.7%. So they're the monthly figures. But overall, this has made the CPI year over year rise from 8.6% in May to a sizable 9.1% in June. And this is the headline figure that most of the media will be publishing. And for good reason, because 9.1% inflation is totally unacceptable, and those of us in the know are fully aware that these inflation figures, to a large degree by the way they're calculated, grossly underestimates the true cost of living. This jolted the market, confirming that higher interest rates will be the order of the day when the Fed FOMC meets on the 27th, and we saw a fall-off of gold and silver prices the next day. Retail sales then on Friday came in at 1% for June, compared with minus 0.1% in May, and the Empire State Manufacturing Index provided an enormous positive 11.1 for July, compared with minus 1.2 for June. So whilst retail sales and manufacturing index provided good news, what we suspect some may have missed is that it also guarantees that the Fed can be aggressive, as despite already rising rates multiple times, retail sales and manufacturing have not fallen off a cliff, and this will embolden them to be even more hawkish short term in order to tackle inflation and not worry so much about the economy moving into recession. Whether that happens in the real world remains to be seen, but economic modelling is suggesting the Fed can afford to be very aggressive over the next few months. Now, before we look at that in more detail, taking a look at what announcements we can expect this coming week that could potentially impact prices. Well, on Monday we have the NAHB Home Builders Index for June. Building permits and housing starts for June are announced on Tuesday. Then on Wednesday we have the existing home sales for June. Thursday, weekly jobless figures and leading economic indicators. And then on Friday, the S&P Flash Manufacturing and Services PMIs. So relatively light data, which will mean analysts will probably react more to what happened this past week than what's going to be announced this week, though we will be looking at the PMIs on Friday, as they will give us a good indication of the final figures. Now, the CPI moving to 9.1% now creates a realistic possibility that the FOMC will raise rates on the 27th of July by a 0.75% increase, without ruling out 1%. And we already have 0.5% baked in as an absolute guarantee. There was a significant probability that 0.75% would happen, with now some forecasters predicting the potential for 1%. Having said that, on Thursday, two of the more hawkish Fed officials stated they would prefer to see a 0.75% rise, and we suspect this is what is going to happen, given them then the opportunity, if necessary, to do something similar at the following meeting. The current odds are a 73% chance of a 0.75% rise and a 27% chance of a full 1% rise. There is a lot to be said for raising rates by 1%, as it will tell markets the Fed is serious about tackling inflation. However, it may also spook equities and fears that the Fed may be on an interest rate increase rampage. This is the balance they have to take into account. They do not want the economy to plummet, but at the same time they have to tackle inflation. Either way, whether rates go up by 0.75% or 1%, this will again act as a significant headwind for gold and silver and most other commodities priced in dollars, because the dollar could strengthen even further. Our own personal assessments 3 months ago was a potential to see the index rise as high as 107 to 108. And this was at a time we were seeing the dollar index meandering below 100. We forecast publicly, we expected certainly to see 105, and we did think that 108 was potentially possible, but it would be in extremis. Well, it's reached that and gone beyond it. We cannot now rule out 109, and perhaps briefly for a very short time a spike to 110, though we're not quite convinced that will occur. What's putting us off that figure is that other central banks also realise they're in difficulty as far as inflation is concerned, and may indeed increase their rates too, which will help prevent the dollar index from rising too far. On Friday, there was some profit taking in the greenback, especially bearing in mind the dollar reached a 20-year high on Thursday. The positive note for silver's potential is that if a recession can be avoided, and the jury is still out on that one, then the downward pressure on prices as a result of decreasing industrial demand may be tempered. But we shall have to wait and see. Technically speaking, for gold, 1700 has so far provided strong support, and 1800 will now act as strong resistance. 1750, though, will be the first resistive area for sure, and gold needs to lift comfortably above that level to show it still has some legs, if it is to run upwards, that is. $1,600 is seen by many as the true support line, and if this is broken, gold could quite easily over time descend to as low as 1,500. However, we believe we would be talking weeks if not months before that can happen. Silver's most significant support level is $16, but we have to see silver first penetrate 18 and then 1750 before we could consider a slump to 16. There is resistance at $20, and some traders are currently considering this area as a selling opportunity, which does not augur well for silver short term. Now, this coming week, all things being equal on the geopolitical front, we must never forget that, we should see some consolidation for gold and silver, with perhaps more significant moves the week after when the FOMC declares. Of course, though, traders may again try and anticipate the following week, this week, and take the hammer to gold and silver, but we suspect not, as to some extent much of the pricing of interest rates is beginning to be baked in, but not all of it, and we caution you on that. So, with that in mind, and the prospect of an attempted rally, which we saw on Friday, which we believe if it does occur, it will eventually fail, we expect to see gold this coming week trade between 1650 and 1750, with 1625 and 1775 as outliers. We forecast silver will trade between $18.25 and $20, with 1725, yes, a full $1 lower, and $20.50 as outliers. What do you think? Do share your thoughts. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And naturally, and as always, we wish you a safe, enjoyable weekend and prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.